Hello there, this is Anastasia, real estate with an accent, and I'm here with Denise Drews from PRMG. She is a home loan expert. So I'm going to grill her on a few questions regarding how can you get a loan if you're self-employed. So, Denise, to you, what type of loans are available for self-employed?
Actually, all types of loans are available for self-employed people, whether it's conventional or FHA or VA if they happen to be a veteran. The fact that somebody's self-employed does not preclude them from being approved for a mortgage.
Looks to me like the main difference between a self-employed person and a person that has a regular employment is that it lays in the proof of income, correct?
Correct. Self-employed income is not guaranteed like W-2 salary type income. So what we have to do is look at tax returns, and we have to average their income over a 2-year period, whether they're filing as a sole proprietor or a partnership or a corporation. We're going to look at least 2 years worth of tax returns, and we're going to calculate their adjusted gross income after expenses, and then that is the income that we'll use to qualify for people. Now, the good news is that if somebody's been in business in the same self-employment for 5 years or more, we can just use their most recent tax return to calculate their income for qualifying and not have to average it over 2 years. We want to know that people have been employed for at least 2 full years, whether you're a W-2 salaried person or a self-employed person. We want to see a minimum of 2 years 2 years employment. But for self-employed, again, if they've been in business over 5 years, we would only have to look at their most recent tax return, and we would either get a copy of their business license or a copy of a letter from their CPA stipulating that they've been in business for over 5 years.
Are rates the same for
Yes.
self-employed and employed?
Yes,
So
rates are the same. Rates are the same for self-employed persons versus W-2 salaried persons. No difference.
you know that a lot of self-employed people have tax benefits that are in a way better than when you're employed, because you can bring some expenses towards your business and and therefore pay less taxes. So my question to you is, what do you suggest for someone that is self-employed to do in case they want to buy a home? Because obviously, if they bring a lot of expenses against their income, what happens is that it becomes very, very tiny. So can you walk us through what you suggest in that case?
Sure, this is a very good question. And I tell people that being self-employed and filing your taxes on your self-employment tax returns is kind of a double-edged sword. On the one hand, you can write off a lot of stuff and therefore limit or lower your taxable income. But then on the other hand, you may be writing off so much that you are not showing enough qualifying income to qualify for a mortgage. So I always tell self-employed people when they're getting ready to buy a home to look at their tax returns, look at what their adjusted gross income ends up being. And in cases where they've written off so much there really isn't a lot of income, I recommend that they file their next return strongly and not write off so much and demonstrate a much higher adjusted gross income for qualifying.
At what point do you recommend someone that is self-employed to talk with you about, being evaluated and perhaps take the appropriate steps to get to the point that you can actually qualify for a mortgage?
The minute they think they want to start looking at real estate, I want to look at a tax return and determine whether or not they could qualify, how much they could qualify for, if they need to wait and file, next year's return stronger, showing more income. And that's kind of the nice part about if someone's been in business more than 5 years, We only have to show one strong tax return, their most recent one. So even if they've been writing off everything for all the years they've been in business, if they file their next return strongly and show good qualifying income, that would be all we need, as long as they've been in business over 5 years.
Normally take, considering like the average self-employed? And I know I'm asking you a difficult question because you probably have self-employed people that are ready to pull the trigger as soon as you talk with them, and self-employed people that require you to do some work. But if you had to weight up an average, what would you say?
If we have full tax returns at the time of application, we still are closing loans for self-employed people within 30 to 40 days. And if their tax returns aren't in a position where they show enough income to qualify, they can always file an amended return, or they can wait until the following year and file a new tax return showing a stronger income. So what's different now because of COVID is that for all self-employed people, in addition to 1 or 2 years worth of full tax returns, we also have to look at their year-to-date profit and loss statement to demonstrate that the cash flow is still there for their business. And we also have to look at business bank statements that show the deposits to their business to support the cash flow that they are claiming on their year-to-date profit and loss. So it's another couple of steps that have been implemented due to COVID.
Thank you so much for following this channel. If you have any topics related to real estate you would be interested in seeing us discuss, let us know. And in the meantime, see you very soon. Don't forget to subscribe.